Episode 52, Daily Trader TV. It's the 11th of the 10th, 2018. Market update. Don't forget, I'm not qualified to give you advice. Don't follow me into trades. Trading involves risks that involve losing more than your initial stake. We just, as things are so volatile, I had quite a few emails asking for advice, really. And I can't give advice, but I can obviously tell you what I'm doing. So if we look at the model portfolio, we're 2.87% off all-time highs, 90% cash. There's three trades left running. XPD plus an add point and SBIZ. I can tell you now that the other thing is there's 2.5 R of open risk. If we just go to what we've got left open, the guaranteed stop position in SBIZ is below this candle here. So I think it's 163, so it's somewhere around here. So we're not far off that, and you can see that we had some fairly heavy drops on volume, just basically people panicking. But it is what it is. I'm not going to argue with the markets. If it comes to the stop, the trade gets taken out, and it'll probably be while I'm not watching it. So could be today, who knows. XPD stop position is down here. So again, if it's a really bad day, it could get taken out. The thing to notice though is that the last 3 days XPD's floated down like a buyer's, but not on any particular volume. So XPD might actually survive the day, who knows. If we just take a look at the broader markets, what I was expecting to happen was to break this level, which we did. I'm now looking for this to come back and do a round retest to this level. Might not happen. Might just prolapse straight down, but that's what I'm expecting. We're well outside the Bollinger Bands here. I'm looking for some kind of retracement to mean before we put in a lower high before we move lower again. So we'll see. But it's the same kind of picture right the way across. We sold off quite heavily. You would normally expect some kind of retracement, and then I would suspect that we go lower, and I'd want to see some reversal of trend before taking any more trades. One thing to look at is we've opened below some significant levels on DAX. We've got this gap in place. If we look on the intraday at the gap, so you'll have seen in one of my previous videos, I think it was called Dan Zanger's opening range. So this is a 5-minute candle. So if we take the first 6 candles, 1, 2, 3, 4, 5, 6, we call that the opening range. So there's the opening range, and basically the market's now trying to find its direction. So the two options are we break out of this lower range and we just go straight down. What the markets tend to try and do is close up any gaps in price. So it could potentially come above the opening range, close this gap in price action out, and then move to the downside. So we'll see when it gets down to this lower end of the range, see if there's any indication of acceptance below those levels. It's not looking particularly great at the moment. Thing to note is how fast things deteriorated in the US. big move down on volume yesterday in the US, straight into the 200. These averages, they're not magical support areas. They're just reversion to mean. So we've had a big move down into an area that the institutions will be looking closely at on volume. So US session today is going to be particularly interesting. Something we've been looking at a lot is Italy and China. Italy's just getting worse and worse. A lot of it is due to a rollover in European growth, but also the political problems that the country is solving, is giving itself. It's massive debt, and if Italy is going to have a problem with the banking system, it's going to affect the global economy. There's no two ways about it. Italy's debt structure is enormous. If we look at oil, yeah, oil's rolled off a bit, but still in an uptrend. So we've still got the inflation story to take into account. Huge moves in Asia overnight. Big gaps down. There's, as we've been saying on the channel for a while, there's considerable problems brewing in China. You can see it in the markets, and you can also see it in the currency against the US dollar. US dollar looks like it's trying to break out again. So interesting times, but effectively got 2.5 hours left on the table of risk. We've banked 10.56% for the year. We're getting to the stage where we're fully cash, and I suspect that these trades will be closed out as losers, possibly as early as today. So that's all for now. Don't forget, you worked hard for your money, so don't blow it all. Make sure you take care of your risk management when you're trading.